All right, welcome to the weekly prep video for the week of August 18th to the 22nd. In this video, we'll be taking a look at the action over the past week from the indexes, liquid leaders, industry ETFs, and then end the video with long and short setups like we do with every weekly prep video. So if you guys enjoyed the video, please leave a like and subscribe to the channel. If you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. All right, jumping into it. We ended Friday down a little bit on the indexes. QQQ down 0.46%, right on that 5-day moving average. But overall, a really solid week, up about a half percent. Gave back about half the gains last week. But again, still over the 5-day moving average. Basically, just coming back to previous highs here. And we found support intraday. So even if this pulls all the way back into the 20-day moving average and this little gap zone at 570, I think that would be healthy action overall. Taking a look at the S&P 500, a little bit stronger overall. We've seen NASDAQ start to deteriorate just a bit compared to the S&P 500. We'll go over the industry ETFs, but software, semiconductors, cybersecurity, kind of a little bit weaker. So we're seeing that rotation in the market. S&P 500 finished Friday down 0.23%, still over the 5-day moving average, right at highs, acting great. The growth stocks in the Russell 2000, that's the ticker IWO, finished Friday down 0.3%, up 2.8% for the week, and really was the main kind of theme for the week. We had CPI inflation report came in just under expectations or right at expectations on Tuesday. Saw a huge acceleration bar here with a gap up through the 5 and the 10-day moving average, closed at the high of the day and at a new year high. We pushed through on Wednesday as well. And then on Thursday, we had PPI inflation report come out way hotter than expected. I think it was 3.3% versus 2.5% expected. So with that, the probability that interest rates drop, that probability dropped just slightly though. And overall, you could see with these lower wicks that every time we did pull back, it got supported at that 5-day moving average, and we held that area. So overall, I know positioning is pretty heavy in the NASDAQ, at least last week it was, and pretty light on IWM or the Russell 2000. So with positioning lighter and a potential breakout here, hopefully we do get that rate decline for this chart at least, and we can see further price action higher. ARKK not doing anything wrong, rallied up and closed all the gap down zones from a couple weeks ago. Closed at the 5-day moving average, still into this slight support gap here. This is another name that if it just pulls back and puts in a higher low, little under the 20-day moving average in this gap zone around 74.50 area, I think that would be perfectly healthy and really give us like an actual base to work with. And ARKK has had such a massive move up here that if we just put in a lower high, let that 50-day moving average catch up, maybe chop for 2 or 3 weeks, I think we could see some really quality setups. Unfortunately, the one kind of blemish on the week was Bitcoin. False breakout on Thursday, or sorry, on Wednesday. This is using IBIT instead of the Bitcoin chart. But false breakout on Wednesday with PPI came in hotter than expected. That really flushed it lower. Lost the 5 and the 10-day moving average. I'm filming this on Friday, and today closed right at the 20-day. We don't want to see a little rally and a lower high here and then acceleration downward. Hopefully we can get supported at the 20 and get going again. But some pretty ugly action after making new highs for Bitcoin. Jumping to the liquid leaders list, we'll just sort it by price percent change for the current week. And the strongest stock in the market right now is Reddit, up 14.4% this past week. It is one of the few stocks that gapped up on earnings. And instead of selling off or at least chopping sideways, it accelerated higher. Made a new all-time high this week, a green line breakout, awesome action, and just is surfing this 5-day moving average. Real sign of accumulation here. So when we do get a market pullback, it's going to be a name to focus on. FUTU, this was added to the leaders list this week. One of the leading names in China. I would say FUTU and TME are the two leading stocks in China. Great action We had that shakeout, kind of like a breakout retest on August 1st, and since then, just straight up action. This does have earnings next week. I think is it Tuesday, Wednesday before the market opens. So we'll see how it responds to that. SoFi added back to the leaders list today. Good, really strong action off the 10-day moving average. Close over the five. Might have been not quite all-time high close, but really strong action. You can see on earnings, we had a big gap up, rallied, and then sold off. They did an offering, which got supported on that 20-day moving average. Gap up, another gap down. A lot of volatility here, but then things got tighter, kind of coming into this week, and from then we've rallied higher. ALAB up 3.6% this week. Ended Friday down 2.6%. And a lot of semiconductors were down on Friday. So that's kind of like a group theme that's pulling back. Two unfilled gap downs from the highs, but on decreasing volume and good closing ranges on both of them. So I'm not like too concerned about this name. I honestly think a pullback to the high volume close and the 10-day moving average is probably a good buy point. I think that actually is one of the long setups that we'll talk about. Meta up 2% this week. Had a nice pushback through the HVC from the closing from the earnings day. We see that big gap up 11.3%. Traded sideways, let the 5-day EMA catch up. Then gap and go on Tuesday on the CPI inflation report. And then just sideways action since then. A little weaker close on Friday, but compared to the indexes, stronger. MP, this was basically flat on the week, up 0.9%, down 2% on Friday, but continues to just trade sideways on that 5-day moving average and right at or above the high volume close from earnings. It's not even, I shouldn't say in high volume close. I've just been drawing the lines across the closing price from earnings to see if the stock's being accumulated post earnings or if it's just like a pop and drop. And one thing to note here is we had a gap up on earnings, and then the next day we really accelerated higher, reversed, and then closed on the low of the day on pretty good volume. That was a big warning sign, and I expected at that point to see follow through to the downside, maybe a 20-day EMA test. But instead of seeing that follow through, we just saw volatility contract while this moved sideways, letting the 5-day and the 10-day catch up. That's really solid price action overall. So good to see that. Robinhood down 0.4% this week, but had a great Friday, up 3%. All it did was pull back into the 20-day moving average and support gap after a little rally here. Good add or buy spot on Thursday, and then higher high, higher low, closed right near all-time high closing on Friday. NVIDIA continues to just chop. There's no real momentum in this name for the past couple weeks. It does have earnings coming up in I think it's about 2 weeks, August 27th. So I don't really see NVIDIA going anywhere until then. Maybe a pullback. It's been known to pull back to the 20-day EMA kind of before earnings reports. It did this last time, or not last time, but in 2024, it pulled back to the 20-day before earnings. So I wouldn't expect it to rip higher going into earnings. Maybe a pullback into that 20-day or one of these gap zones beforehand. And then Palantir also starting to feel a little weak here, very extended and has been a monster stock. But on Wednesday, we opened at new highs, closed near the low of the day, still above the 5-day at that point, but then lower highs, lower lows on Thursday, and then gap down and sell off in the morning, right to the HVC that got supported there and then a solid closing range. So finished the week down 5.3%, but I do like to see the support at the close from earnings. So any kind of pullback, hopefully we can see more support there. Let that 20-day EMA catch up. Next, we'll go through the industry ETFs. We'll sort this by percent change this week, and we'll go through each one of these, but I'll spend more time on the ones that I think are most important and less time on the others. Starting off with TAN, solar ETF. Big news on Friday, up 8.8% on Friday, 8.6 for the week. There was some announcement where part of the tax incentives were going to be applied that they didn't expect to be like applied. I need to look into that further, but price action and volume action from that is very apparent. And if you zoom out on this, we put in this accelerated move to the downside in April, then started to actually build higher lows. And at this point, on the 16th to the 17th, we got news that they were cutting all the tax incentives from solar, and we got this big gap down, which was expected. But what I didn't expect was that this would be a higher low, and we would just test the 50-day and then rip higher. So when we didn't accelerate to the downside on that bad news, if that bad news can't take it lower, chances are it was going to go higher. And we did see a move through the 200-day, little flag here, rallied up, and then we started to see a relative weakness. But on themes that are beaten down like this badly, this fell from 120 down to 26 over the last like 4 years. You don't tend to get clean action until you really kind of churn out and build out this base. And what we had here was a base breakout, rally, and then really just a base, like a breakout retest. Came into the 50-day moving average, bounced, another test, higher low, and then we get the gap up today and just massive acceleration to the upside. XBI, biotech ETF. I do have a position in LABU, so really excited to see this continuing to act well. This was a theme that I was focused on going into the CPI report because if inflation came in kind of in line with expectations or lower than expected, the probability that they would cut rates would be higher, and lower rates would help a lot of biotech stocks borrow money to do their research. And that's kind of how it played out. We had CPI come in right in line with expectations. We were right on the support gap in the 50-day moving average. So really good risk reward spot right through there. Popped the 5, the 10, the 20-day EMA on Tuesday, gapped up, got through the 200-day moving average, closed back through this resistance area on Wednesday. On Thursday, PPI came out, inflation super hot, and this gapped down, but instead of gapping down and accelerating lower, it actually showed relative strength to a lot of the kind of rate sensitive themes and closed green on the day. And then on Friday, we had follow through up 1.2%. So this, I think, was helped out by XLV, which is the healthcare sector ETF, kind of putting in potentially, I would say, a bottom here where we got right near lows and then we followed it with a gap up on the 8th, some tight action, a gap up through the 10-day, close over the 20-day. And then on overnight on Thursday, it was announced that Berkshire Hathaway took a position in UNH. A bunch of other hedge funds took positions in UNH. And it does look like this theme has potentially bottomed here. And that, along with CPI, I think is really helping biotech out, which is like a slice of healthcare, I would say. So, really excited about biotech. Healthcare, I'm glad that the group looks like it's bottoming. The more groups that we have participating in the rally, the better. And then another rate sensitive group is ITB, that's Home Construction ETF. This is a name that's been signaling that we were getting rate cuts for the last couple months. Basically, July 20th caught my eye where we held the support gap down here. We didn't make a new low, and then we popped through the key moving averages, traded sideways, and then really July 1st, like massive volume move, really strong candle. And from then, you just see a bunch of blue skyscrapers of accumulation candles here all the way up. And even on the action on Friday where we opened at the high, closed kind of near the low, we're still above the 5-day EMA. That happened on very light volume. And this is a theme that's turning around here. So a couple more days chopping, let that 5-day catch up. I think this is still a theme to focus on. Talks about XLV. KWEB next up 3.7%. This is the Chinese internet ETF. If you've seen my videos, I show this 3.5 year base every single video because it still looks like the cleanest base. We could check it out on a weekly chart. It's a little cleaner there. Just going sideways for 3.5 years. When this breaks out, this is going to have a lot of room to the upside, and it's showing every sign that it's about ready to go. So I do have a position in KWeb, well, technically CWeb. It's the leveraged KWeb, and hopefully it plays out to the upside. PEJ, this is the entertainment ETF. Not really one that I focus too much on, but back through the 20-day EMA this week and then tight price action Thursday and Friday. Not a complaint from me there. IYT, transportation ETF, heavily owned, well, largely owned with Uber. What am I trying to say? The largest holding is Uber. Sorry about that. Up 3.6% this week. Got back through the 50-day, the 20, the 5, the 10, all that stuff. Tight price action and good action from Uber and this ETF on Friday, finishing up 0.3%. XRT, the retail ETF, just surfing the 5-day moving average. Good to see that. I know AEO is kind of pumping that up a little bit, which is good to see. XLY, the consumer discretionary ETF, not one that I spend a ton of time on, but it's above the 5-day EMA. All the moving averages are in the right order. The more themes that do that, the better. Blockchain ETF. I'm really surprised this held up so well compared to Bitcoin. It is some of the components are Robinhood, which we just saw is at like right near all-time highs. Um, SoFi, Coinbase, which honestly, I like with Coinbase's weakness, MSTR's weakness, I would have expected this weaker, but just holding on to that 20-day moving average, you got the 20, the 5, the 10, all at the same price. So good price action overall there. XLB, the materials, another group I don't really focus on, but it's above all the key moving averages. Just kind of sloppy here. So up 1.9% last week. Cybersecurity actually finished the week up 1.2% after a good day on Tuesday, gap up on Wednesday, but we're still trading under all the key moving averages. Really, what I would want to see is a rally back up to the 50-day, a pullback, a higher low, and then we can start to build out the right side of this base and have like a really quality base going into like the end of Q3, maybe start of Q4. XLF Financials ETF up 1.2% this week. Ugly day today, opening at the high, closing at the low. Still above the 10 and 20-day moving averages, so can't complain too much about that. XOP, oil and gas exploration, still feels heavy to me. Doesn't feel like a name that I need to participate in. Rejected at the 20-day moving average, but did finish the week up 1.2%. Same thing with XLE, finishing the week up 0.8, rejected at that 50-day moving average. Under the 200-day is not ideal here. Robo, sideways action this week, up 0.8%, still surfing above the 5, the 10, the 20, 50, and the 200, all in the right order. If you zoom out, it's got a multiple year base that we just broke out of recently, and I don't think the theme of robotics is going anywhere. Semiconductors, very weak on Friday, down 2% with a gap down, opened at the high of the day, closed kind of near the low, right on the 10-day moving average, on a pickup in volume. We still finished the week up 0.7%, but first kind of warning sign for semiconductors. We saw the weakness in cyber, and then I'll jump to IGV, which is the software ETF that like those three are kind of like growth centric type themes, and they're all pretty weak right now, which is not ideal. IGV finished the week down 0.5%, rejected at the resistance gap today, closed right on the 50-day and the 5-day. So, I mean, this could just be a little like wedge down and we could get a gap up and rally on Monday and then it's back to the races. But I want to see this over the 50 days as soon as possible. Jumping back to FDN, this is the Internet ETF, heavy positioned in Meta. Overall, the key moving averages and acting well. XME, metal and mining's ETF, opened at the high today, closed at the low, still right on the 5-day EMA. Last 2 days of kind of pullback sideways action was on light volume. So overall, I don't think it's doing anything wrong. Still kind of a leading theme with MP as the leader in that group. Gold miners, GDX, extremely strong action this week. We had the breakout last week, and instead of pulling back, we had a gap down on, is that Monday, Tuesday, Wednesday, Thursday, Friday? Yeah, on Monday, we had the gap down into the support gap that immediately got supported and then closed well. From then, we've just chopped at highs and built this little flag base, whatever you want to call it. Feels like gold miners and gold is set to go higher. IYZ flat on the week, a little gap down on Thursday with inflation, and then closed above the 10-day. Not a group that I'm really focused on. Covered IGV. XLP, another group I don't really look at too much. It's consumer staples. Bounced at the 20-day, still above the 10. Solid. ITA has been a leading group, was like the leading group off of the lows in April. Really clean uptrend here, based a little bit, clean uptrend. Now it's starting to feel a little bit heavy. We haven't been able to get through this resistance gap. Friday, we lost a 20-day EMA. We've had some distribution days on big volume here. Still finished the week only down 0.7%, though. And then the weakest group of the week was NLR. This is nuclear and uranium. We keep seeing weakness out of SMR. Oklo had a rough day today. Um, LEU, really rough action. So some of the uranium names in the theme are actually acting pretty well and would be the focus for me within this ETF. But hopefully we could see the nuclear names bounce as well. Before getting into the long and short setups, I want to go over the NAAIM exposure because I forgot to do that on Thursday. That got updated on Thursday, and all of these numbers are reported by Wednesday's close. This is the percent of exposure for active investors. And what I don't like to see is when this number's over 95%. That just means that the market is pretty crowded long. And what we saw last week was 96% with the most bearish investor in the entire group at 0% exposed, meaning like they didn't have any shorts or longs, they were just net neutral. And then the first quartile, so like 25th percent most bullish person was 90% invested long. Quartile 2 and 3, 100%. Most bullish, 200% long. And the deviation was only 36%. So everyone was long last week. Thankfully, that number came down. We have someone who's negative 200% bearish. But then like quartile 1, 2, and 3 is still 90, 100, and 100. So people are still pretty long this market, but it's not over that 95% threshold for me. So really, to me, this 85 number just means like there's no signal here. It doesn't mean that the market can't go down. Doesn't mean that the market can't go up. Just not a warning signal yet. Another thing that I want to cover, we are still in the middle of earnings season. So I always like to go over to Earnings Whispers Twitter account or X account and just a quick, easy way to see like the main companies that are reporting. So know when the companies that you own or the companies that you're going to trade are going to be reporting. Some interesting ones, Pan W on Monday, Home Depot on Tuesday, AS on Tuesday, Toll Brothers Tuesday after the close, Target Wednesday morning, a lot of Chinese stocks, Futu, Baidu, GDS, BZ, all Wednesday before the market opens. YMM, YSG, BILI, VNet, all Thursday before the market opens. So we have the big base set for Chinese stocks. Hopefully, a lot of these earnings break to the upside, and we can get that 3.5 year base breaking out. All right, let's jump to the long setups. I got 12 to go over. We'll sort this just by dollar volume, so most liquid to least liquid. First one is Tesla, and let me just go to a weekly chart on this first. We've basically been basing for 4.5 years after the monster run that Tesla had in 2020 and 2021 from split adjusted $12 up to $300. Monster move. And after a monster move, you need a ton of time of digestion before you have like you could have tradable rallies and tradable trends, but like for long-term investors, you need a big base like we've gotten after a massive move like this. Back to the daily chart. Now we're starting to see this line up. And I did take this trade today as it came into the 200-day moving average and then reclaimed the support gap low. We've basically closed right on that area. So just another retest of the 200-day, the 20-day EMA, and 325. It's a potential add spot or buy spot. And then I would be using a 3 to 4% stop on that name. But I think because of the base potential, because Tesla's had all of this bad press and it still has not like crashed. So from that, now we're starting to get some tight price action. We've got the 50, the 200, the 20, the 10, the 5, all right on top of each other. From contraction comes expansion in one direction or the other. So it can just as easily break to the downside, but you just play it with tight risk and roll the dice. Uber, this was on the watch list coming into the day on Friday. Didn't quite undercut the support gap in the 20-day EMA, but that's the spot that I'm watching again. I've always traded Uber better on weakness than on strength. So for me personally, that's the spot that I'm watching. I'm not trying to buy it through a pivot. It just tends to pull back after those types of moves. So 20-day EMA support gap right at 90.50 is the spot to watch for me. Carvana continues to just consolidate after this earnings pullback, bounce multiple times at the 50-day moving average. Today was, I would say, probably the buy point, like on the 50-day, but settled in right on this pivot at 351. Through that area is a buy point. Stop would be today's low. ALAB, talked about this on the leaders list, but just looking for a pullback into that 10-day moving average into the high volume close from earnings and the 175 round number spot. So pull back into there would be buyable, then use 3 or 4% stop. MP, we covered the volatility contraction at highs above the 5-day moving average. So just looking for like another test of the HVC as a buy spot versus the 10-day. Even if this pulls back a little bit, like into the 10-day moving average and gap zone at 71, I think that's probably even a better spot. Um, but overall, this chart's looking great, continues to be supportive, and you don't usually see volatility like this just contract while the price stays over the 5-day. So don't want to ignore that one. NBIS, similar to ALAB, just looking for a pullback into the HVC, into the gap zone low and the 10-day moving average, right around $65 as a buy point there. Rocket Lab, really just consolidating action, gapped up on earnings, seemed like it was going to get going, sold off, then followed through to the downside, but wicked down past the lows, then rallied. Now just continuing to pull it back. I think like another inside day would really set this up well. Hopefully we get that on Monday, and then this will be on the watch list for Monday's video. But through today's high is buyable. Stop would be today's low. Wolf had the highest volume ever on Thursday's gap up 60%, closed at the high of the day. Good follow through on Friday after a little gap down. Now we're just looking for a retest of the HVC at 870, whatever the close was, 871. Stop would be today's low there. Webull, we're in a speculative market. We've seen this name already make a move from $9 up to $75 in a very short amount of time, crash all the way back down. And now we're tightening up. We got the 20-day moving average curling up, and we just closed over this resistance gap. So we had a gap zone where we see multiple wicks all through this area. We closed that on Friday, meaning those sellers, we have no evidence of those sellers being in that area anymore. Now this looks ready to get going. So just through 1615 is buyable. Stop would be the low of the day. VSAT, couldn't find a prettier looking chart out there. Massive move even before earnings, but then really strong action on earnings, up 30%. From that move, instead of pulling back in an aggressive way, we had really tight price action as it pulled into the 5-day EMA. And look at how quickly volume dried up. No one's rushing to sell this name after a 30% move in one day and a 100% move in just 5 days. Does not happen very often. You have a nice quality high type flag. Just looking for a break through today's high as a buy point. METC, this is a name that I highlighted on X on Thursday, and I really, honestly, I didn't have a position in this, so like today's action, which was bad, down 12.5%, really just sets this up for a lower risk entry point for me. But I really like how it gapped down. I think this is on earnings. Let me check. Yeah, sorry. Gapped down on earnings below the 20-day EMA, but then rallied and reclaimed the 20-day and then just kept getting accumulated. And when you have that happen where you gap down on news and immediately get bid back up, it's a stock that you want to keep on your radar for stuff like this, where if we get like weakness Monday, it's a relatively thin stock, only trades $75 million a day. It's thin enough where we could see a quick wick down to the 20-day EMA and this gap zone at 2175-ish. That would be the spot that I would try to really size up and then just play this for like a 2 or 3% stop. But really, I like the action. A quick shakeout. Everyone who bought this late is now probably stopped out. And hopefully we get some weakness on Monday to really scoop up shares right at that 2170 area. And then last stock, MCVT. This is a complete performance booster. Only trades 50 million shares or $50 million a day, but is acting like a monster stock. Was up 218% in one day on the 25th. Instead of collapsing down, it's consolidated, broke out over this little pivot earlier in the week, rallied into new highs, and then we're tightening up again on the 5-day moving average. We're just looking for a breakthrough 750 as our entry. Stop would be the low of the day. And I would play this with lower size just because it is less liquid. ADR is 26%. So it can obviously move in a massive way. And the fact that it's not rolling over after this is a good sign. And finally, we have 10 short setups to cover. First is Root Insurance. Gap down on earnings, sold off through the 200-day moving average, finished down 26%, and really did not have a snapback with the rest of the market. Rallied into the 5-day a little bit, gap down on Thursday, uppercut and fail of the resistance gap and the 5-day EMA on Friday. That is the spot that I'm watching to short 92.50. Ideally, it happens like on Tuesday where we have like a little inside day and then rally up in there. Um, and then my stop would be the high of the rally. Royal Caribbean, it hurts me to say this, but it might be time for like a larger base for this ship. Gap down after really tight price action. Kind of reminds me of Duolingo's chart. Gap down, sold off through the 20-day moving average. Another resistance gap that we uppercut and failed on Wednesday. Then tight action on Thursday and Friday. Just looking for a uppercut and fail of the resistance gap and the 20-day moving average as the entry. Stop would be 3%, 2 or 3%. UMAC, this is one of those speculative names that had a massive move from 1 up to 22 in December of last year, but did not get back to its previous highs like so many growth stocks did. Has lost the 20-day EMA recently, right on the 50. So this is a setup that you could argue long or short. I would be fine with either. I'm just looking for either a rally into the gap zone at 1050 and fail there, or follow through to the downside, losing the 50-day moving average. QUBT gap down on earnings today. Actually, pretty strong action, even though, let's see, they made their revenue was $61,000. $61,000 of revenue on this name. Interesting. But the company doesn't have to make money for you to make money, even if it does, if you do have to short it. So we'll just look for a little rally up into this gap zone, let that 20-day EMA catch up to 16, and then hopefully that would be a lower high and we could roll over there. ARM, we've already talked about semiconductors being a little bit weak. This is already at the 200-day moving average, and the 200-day is flat. We're below the 50-day, which is starting to curl over. We have a gap down on earnings, a rally up to the 50 that got rejected, then a resistance gap down on Thursday that we uppercut and failed today on Friday. Looking for another test of that area as a potential short, and then stop would be the 20-day EMA. Joby had good news come out that they finished a flight on Thursday, announced it on Thursday. So we gapped up today on Friday, opened on the high, closed on the low. They sold that good news off all day long. Not a good sign for the stock. Just looking for follow through the support gap, through today's low as a potential short, and then use a couple percent stop, use maybe the 10-day EMA. ZEPP, I think this has another like one or two expansion bar to the upside. At least that would make it a much preferred blow off top. Right now, it's still acting well over the 5-day EMA. So, very much a setup that I'm looking for more in the second half of the week than on Monday. The only way that I would really trade this on Monday is if we got a sizable gap down to start the day, kind of like NEGG, which we'll cover in a second. Otherwise, like this looks like it can have like another 20% day, 10% day, 30% day, like it has been having. So with these like parabolic shorts, you need to stay on the side of the VWAP, meaning if you enter the trade and price starts to fall, trades below the VWAP. If price comes back through the VWAP, it can squeeze very, very hard. You don't want to be caught. So make sure you're using a stop. Make sure you're trading with the intraday trend. And really, another day or two to the upside would make this a better setup. SERV, another one of those speculative names that made highs, actually got back to highs in February and then gapped down. Lower high, lower high, lower high. Now the 200-day and the 50-day are overpriced. It's a speculative name. We started to lose the key moving averages, like the 5 and the 10 earlier this week. And now this looks like it's ready to just roll over. So through today's low is a short, even if it like rally. Actually, what would be best is a uppercut and fail of $10. So the 5-day moving average and $10, little rally through there and failure. That would be a better entry, and then stop would be the high, the gap zone at 1050. SBET, oh, had earnings today. Interesting. So gap down on earnings, I guess. Close near the low. This is one that I'm just looking for a little rally back up into that gap zone as a potential short. If it just falls apart here, I won't chase it lower. And then NEGG, this is what I mean when I'm talking about ZEPP, is when you have a name that makes massive moves like this and then trades relatively tight over the 5-day moving average, you could short it, but just be ready to cover very quickly because you can have a 34% day and then a couple of tight price action days and then another 25% day followed by a 40% day. This stock has rallied from $3 up to $130. Finally, we got a large gap down today. That was the short trigger. So just like ZEPP, I was looking for a gap down to start the day. Got it. We flushed. At one point, it was down like 33%, and then so draw the gap there. Sorry. Um, and then we did rally a little bit towards the end of the day, but overall, we had the highest dollar volume ever on August 14th on Thursday, followed by a gap down is not usually a good sign for the overall trend. It's the most extended stock in the market by ATR compared to the 50-day moving average, which is usually a good short sign. So I'm just trying to like build a larger position in this and really ride it down much lower. So that is going to be the weekly prep video for the week of August 18th to the 22nd. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at Market Open, you can sign up for the Discord using the link below. I hope you guys have a great weekend, and I'll see you guys on Monday.